Maybe I could ask each of you, starting with you, Eric, and we'll go down. Just point out the one thing that you're really looking for this year, looking to happen, looking to get a hold of in your portfolio, whatever it is, that you think is going to be substantive in what you do for a living with respect to digital assets this year.
We filed for Solana with staking, waiting for the government to open up. We're not going the backdoor route like some of my competitors have gone. And that's it for 2025. 2026, I will just quickly state, and we briefly talked about this on the panel, but tokenization is real and it's coming. And the train is leaving the station as we speak. So where I think we as asset managers are all, trying to figure what that looks like, but that's definitely coming anytime soon.
Yeah, and by this year, I do mean the next 12 months. So
Fair
that's a
enough,
good,
fair
that's
enough.
a good. And by the way, the staking in the ETFs, the reason that that's so important, and it's not just in the ETFs, it's with every portfolio, is most digital assets, if you just leave them in your wallet or in your account, they're not income producing. And so you have to affirmatively do something to make them income producing. That's a whole other part of the financial picture.
I actually like to see more awareness from the mainstream on the fixed income part of crypto because people think of crypto, they think it's risky asset, I don't want to own it. But if I tell you there is a fixed income market in crypto where you can earn a yield which is similar or higher than private credit, which everybody loves, in crypto you can get that maybe even with less risk. I mean, again, risk is all relative. And this is where crypto can actually generate a lot of good opportunities. So I don't have time to expand, but think about DeFi and all the challenges. I'm really looking forward, including the family office I manage, right? Introducing institutional quality asset management that can bring juicy crypto yield to mainstream investors.
Yeah, that's a great point. I think people don't understand that on chain, I don't have the JP Morgans of the world just yet. So I don't have billion-dollar balance sheets floating around, people lending all over the place. So it's a little more scarce, the lending. And so obviously the rates are higher. But yeah, similar market.
A concrete regulatory framework from the SEC is a big one. I know they're working on it, but I think we're all waiting to see it.
Well, from your mouth to God's ears. But that is high on the list. We'll get a market structure bill. It's not going to solve all our problems, but as the markets love to say, clarity is the road to higher prices, right? Without it, we can't grow. So, Francis, what are you looking for?
Yeah, so on the technical side, I'm looking at why we didn't really have a recession, a meaningful recession post the Fed raising rates and keeping them high. You had a record amount of fiscal spending. You had a lot of private credit sort of made up for the commercial and industrial loans when they fell. And then you had, a record amount of credit issued via credit cards with huge interest rates as well. So we have a bifurcated economy. 60% of our citizens are living paycheck to paycheck and paying 30% on their credit cards in addition to whatever they're paying at the grocery store. So that is one shoe that there is some risk with consumer fatigue. So just looking at the technicals of it, we have a record amount of liquidity in the system right now. So when people are like, hey, are you bearish because of all these crazy risks? As long as the M2 is making a new high all the time, that's heavily correlated with the S&P 500. And then you can extrapolate those correlations that we discussed with digital assets. From the client-facing perspective, I just think that talking about how you just dip your toe in and where we're heading with tokenization and looking at things like Jamie Dimon says, like everything's going to be tokenized. And so you kind of have this conversation about how you're responsibly introducing them to this and you're looking at it in this very technical fashion.
I think mine's kind of an extension of that. It's just everybody sees the headline success of the ETPs and how much money was raised. I don't think people realize behind the picture, there's still so many barriers placed on these things to access inside of large firms. I would say the most noticeable example of that is the big banks. And so I think from my seat, having those conversations, you're seeing very meaningful acceleration. And there was a little bit of a disappointing pause, I would say, at the beginning of this year. And now you just have an extremely meaningful acceleration of that, where you have the second large wirehouse bank start to enable not just my clients can come to me and trade this on an execution only basis, but you can go out and solicit this. Your discretionary portfolio managers can put this in an asset allocation. We're just removing the roadblocks and all the rules and policies internally at these massive banks to enable access. And I think those are the single highest leverage points from an access perspective, where there's truly one investment committee that controls 20,000 advisors and $1 trillion+ dollars. And so those are turning. We had another big one last week. The first approval for ETH at the first wirehouse bank just this week as well. And I'd say you have 2 or 3 more of the largest ones that are almost certainly going to come this year. And so I think that's just a really compelling story behind the scenes that folks aren't totally in tune on.